Chapter 8, Current Liabilities. In the 4 preceding chapters, we have worked our way down the asset side of the balance sheet. First, we looked at cash in depth. Then we looked at accounts receivable. Next, we looked at inventory. And finally, we looked at long-term assets in the previous chapter. Starting with this chapter, we'll move to the other side of the balance sheet and look at current liabilities. Part A, Current Liabilities. First, we discussed how to distinguish between current and long-term liabilities. Let's first remember what a definition of liability is. Liabilities have 3 essential characteristics. They are probable future sacrifices of economic benefits arising from present obligations to other entities resulting from past transactions or events. So think about buying merchandise on account. Probable future sacrifice of economic benefits. We're going to have to pay cash in the future for the present obligation that we have to our supplier from the transaction in the past of receiving our merchandise. Probable future sacrifices arising from present obligations resulting from past transactions. Remember, assets represent probable future benefits. Liabilities represent probable future sacrifices of benefits. So what benefits are going to be sacrificed? Most of the time we're talking about cash. Accounts payable, we're going to be paying off our suppliers. Notes payable, we'll be paying back that money we borrowed from the bank. Salaries payable, we'll be paying the employees cash that we owe them. Remember though, deferred revenue is also a liability. No cash is going to be involved, but we have to give up inventory or services in a future date for that deferred revenue liability. Liabilities can be classified as either current or long-term. Remember that classified balance sheet, we have current and long-term. Current liabilities are usually payable within 1 year from the balance sheet date. So if our balance sheet date is December 31st, 2020, liabilities are going to be due before December 31st, 2021. Long-term, they're going to be due with over a year. Mortgages, long-term notes that are due in 3, 10 years, things like that, due over a year. Now, sometimes that is not the case. Most of the time we're talking about a year, but sometimes we have companies that have operating cycles that are longer than a year. An operating cycle is the time that it takes to produce revenue. Think about a winery, for example. A winery's operating cycle is most likely longer than a year. If a company has an operating cycle longer than a year, current liabilities are defined by the length of the operating cycle, say 18 months. If the operating cycle of a winery is 18 months, then current liabilities are those that will be due within the 18-month operating cycle. Otherwise, we're talking about a year. And for the cases within this book and within these examples, we're talking about within a year. If the company has only a 3-month operating cycle, we're still going to talk about a year. It's only if it's over like a 15-month cycle. So for the sake of this book, just know that we're talking about within 1 year. But understand that sometimes operating cycles do cause current to be longer than 1 year. This is the current liabilities section for Southwest Airlines. As you can see, it has several different current liabilities listed. Accounts payable, accrued liabilities, air traffic liabilities, and current maturities of long-term debt. Accrued liabilities consist of amounts owed, such as employee compensation, taxes, airplane maintenance, and fuel. Air traffic liability is a liability recorded when tickets are first sold. This is the deferred revenue account. They owe the customer service until that flight is provided. Long-term debt is sometimes referred to as a note. When a note becomes due in the next year, that amount is classified as the current liability. So the current portion of the long-term debt that is due within the next year gets moved to the current liability section. So as you can see, the different categories of current liabilities here, that Southwest Airlines in this instance has $6.8 million worth of current liabilities.